Hello there and welcome to FX Street Currencies in Play, brought to you by Royal Financial Trading. I'm joined by Mike Ingham, strategist at BGC Partners, and a bit of movement in the currency market over the last 24 hours, possibly due to Janet Yellen?
Yeah, a bit of a head fake from Yellen, I think. So having been quite vociferous and sticking with a rather aggressive dot plot and a lot of pushback from that position out of the city, out of the markets, she appears to be crumbling in testimony to the House of Representatives yesterday, and she's going to be up in front of the Senate today. Maybe we'll get a little bit of a moderation on that. Maybe that view will be reinforced, but it's certainly helped to further undermine the dollar. Most market commentators have gone into this year expecting the dollar to further appreciate against the basket of currencies, and of course, in terms of the parity with the euro, perhaps actually falling below parity. But of course, precisely the opposite has happened, and these sort of episodes help to reinforce that downtrend for the greenback.
Let's have a look at today's headlines. So euro dollar off lows off Yellen's testimony, test of 115 coming. Well, it doesn't look like that this morning. We're actually testing 114 at the moment. 114.04 is the live price. We can get the chart in a second. Bit of support there just under the main number, and really not looking as though it's going to break just yet. So market's sort of on hold just at this point. But the initial move there was actually a stronger dollar from 114.50 down to 114. Dollar yen trends lower, tracking US yields. Japanese, have they got their currency under control, Mike?
Well, there's certainly, it's the one major central bank sphere where nobody's really speculating on what their exit strategy is. I mean, that might well come into focus as we get towards 2018 because both Governor Kuroda's term ends, and also Shinzo Abe is not looking like a shoo-in for re-election next year after the most recent metropolitan elections in Tokyo. So, but yeah, I mean, weaker yen, yield curve control still seems to be very much in place right now.
Right, so around 113 at the moment, support just under 113, so 112.80 up to 113 over the last 24 hours. The top of the range, 113.80, 70, 80 has been the situation there. So we'll see how that pans out for the rest of the day. For cable, well, it's actually regrouped after Mr. Broadbent's comments. It was quite cryptic, wasn't it?
Well, this is the wonder of forward guidance, isn't it? It's come full circle, you know. It's just like you know, you go to the sort of Delphic Greenspan era where it was like, yeah, I talk a lot but tell you very little, and then it was, you know, forward guidance is like, you know, well, based on our forecasts, you know, we think that, you know, this is a reasonable expectation, and then of course their forecasts are wrong, so the guidance by definition is wrong, and now you're sort of, you know, we're back to muddying the waters. Of course, you know, you've seen a shift in the rhetoric in the Bank of England, even with the last few months, between, you know, now is not the time to raise rates to, oh, perhaps our next move should be up, and Andy Haldane's been all over the place as well. So, yeah, it's all getting a bit messy, yeah, as we said earlier on, not just with Yellen, but also with the Bank of England.
130 looking like a very solid block to upside?
Yeah, I don't think, I think unless there's further clarity on the whole Brexit issue in the UK, I think there's very little to see that being seriously challenged.
I think the government was described as a chocolate orange this morning.
Shrinking?
In danger of just collapsing at any moment, just because of the precarious nature of that, of the arrangement with
the what chocolate orange does? Does it collapse?
It just unfolds.
That's an explosion.
Yes, exactly. Yes.
But no, badly made souffle, I would say, kind of.
Trading positions, this is not only the retail clients, but also bankers and institutions. So it's a mix of smart and perhaps not so smart money. We won't say which is which.
It's a total market view.
Total market view. So yes. People are still long of the euro, long of cable, and long of dollar yen. So sort of, I mean, you can see that on the charts. Really, we're just all these crosses were at recent support levels, or we've broken back up again. Dollar CAD short, which seems to be quite a good idea, given that it's fallen like a knife since the BOC made their move yesterday. A bit painful on the Aussie dollar, which has shot higher. I think we're around 7,700 now, in fact, on that cross. So that's flying away against expectations. 77.33 at the moment. And then euro sterling, long of that, but that has actually that came back very sharply from the from just below the 90 area a couple of days ago. So that's it looked like a bit of a bull trap on that particular market. I think 89.50 was the peak, and we're already back at 88.24, which is around the support area of the last 24 hours. We'll see whether that holds, but it looks a bit like a bit of a head and shoulders formation on that chart. Moving along, another trade of the day. Euro dollar seems to be forming a head and shoulders pattern on the 4-hourly chart. Form the left shoulder and the head as long as the currency does not break below the neckline of 113.85, which you can see quite clearly on the chart. Yellen's speeches will likely still have an effect on the currency, with the dollar weakening across the board. Interest rate differential will still likely play an important part later on when the Fed continues to tighten. Sell the euro dollar above 114.30, stop loss at 114.70, take profit at 113.40, risk to reward ratio at 2.25. So that trade really betting on a break of recent support. Depends on the Yellen, really, doesn't it? Whether we break down there, whether the dollar can strengthen.
Yeah, well, what I think needed to happen was for Yellen to reiterate the most recent rhetoric coming out of the Fed was soft inflation that we've seen thus far this year. It is transitory. We still, we adhere to our dot plot. We adhere to our plan to shrink the balance sheet. But as I said yesterday, she became very, very wobbly, and the market's smelling blood. I mean, it hasn't believed that dot plot quite consistently. Yes, it looks, a reasonably even chance they'll deliver on 3 rate hikes next year, but in terms of the medium-term monetary trajectory overall, market flatly disbelieves them. And as I said, Yellen's looking wobbly. And also, I'd mentioned that Yellen's probably going to be gone by February next year from the Fed as well. And the question then is who replaces her, who replaces the 3 already empty seats on the FOMC governing board. There's some very, very big questions as to what kind of Fed we're actually going to be asked to deal with and interpret going into 2018.
Just slash my wrist on that note. I feel very, very sad for these people.
Keep us all in commentary jobs, won't it?
Yes, exactly. Mike Ingram, strategist at BGC Partners, thank you very much. And that's it for FX Street Currencies in Play, brought to you by Royal Financial Trading.